Good afternoon and welcome to today's webinar entitled The Future of Payments, What's Coming Next? I'm your host, Vijay Khatri, and today we'll be discussing the current payments landscape and the impact this may have on your finance function in the future. So before I introduce today's panelists, just some very quick housekeeping rules. We will be recording today's session, so if for whatever reason call drops off, I know bandwidth can be an issue working from home, but rest assured we will be sharing today's recording. We will also be doing a Q&A session at the end, but having said that, if you have any questions whilst the presentation is going, feel free to enter it in the Q&A box, which you can see along the bottom of your screen, and we will address those questions at the end of today's session. So today I am delighted to be joined by a number of panelists, as you can see here. First up is Paul Simpson from Kyriba. Now, Paul has been in the payment sector for about 30 years since he left university, and he attends paid UK workshops and often appears as guest speaker at many payment events. Following Paul, a slight change to the agenda. Instead of Philip Mind, we will be joined by Austin Elwood from UK Finance. And now Austin works within the payments policy team at UK Finance, focusing on UK policy issues, particularly the implementation of confirmation of pay, the rollout of open banking, and the development of the NPA. Following Austin, we will have Bob Ford from Request to Pay Limited. Now, Bob is passionate about payments and especially Request to Pay, and about how these impact areas of our lives from both a personal and indeed a corporate perspective. And Bob has worked with a number of leading banks, consultancies, payment schemes, and indeed software houses over the years. And finally, at the end of today's session, we'll be joined by Simon Brooks, who is our guest speaker joining us. So without further ado, I'm going to pass you over to our first speaker, Paul Simpson.
Hello, Vijay, and thank you very much for the introduction. And very good afternoon, and welcome to all of you for joining this webinar. Just run through the agenda. So we've gone through the introductions. I'm going to be spending a few moments going through the Kyriba Payment Hub, why a payment hub is needed, and what its role is in fraud prevention. Then I'm going to explain the difference between machine learning and work rule-based learning as well, fraud prevention. Then we'll see how that fits into your overall payment process. I'm then going to hand over, as you've heard, to Austin from UK Finance, who will spend a couple of minutes on these topics to do with, for example, landscape updates on Request to Pay, new payments architecture. Following that, I'm going to hand over to Bob from Request to Pay Limited, who are one of the few Request to Pay providers, and they're going to explain what the benefits are of Request to Pay and what it can bring. Then I'm going to hand over to Simon from Pay.UK. He's going to talk about a new initiative which is called Direct Debit Interactive Advance Notice, or I'm pleased to say IAN for short, and how that links to Request to Pay and the difference between the EBA Request to Pay and Pay.UK RTP solution as well. Following that, we're going to do a question and answers panelist session at the end. What I thought would be useful is if I set the scene for those of you who don't know who Kyriba are, so I'm just going to spend a minute or two going through that with you. So for those of you who don't know who Kyriba are, this is our experience. We're actually in the marketplace a global company. We have over 100,000 individual users, seats if you want to call it that, of our platform. We actually have 40,000 bank formats that we maintain and update and provide for our customers. This is really important. You know, we have a team, or can I say a bank, if you can pardon the pun. We have a team of people that keep updating the bank formats. So that's constantly done for all our customers, so they don't need to involve IT or spend time and development on that. I think it's really amazing to figure that the 20% nearly on there, as you can see, that we move nearly 20% of the SWIFT global traffic. This is obviously outside of banks. That's a massive figure. And as an organization, we still think we're a fintech, but our turnover is over 100 million as well. We provide international and domestic payment capability, literally domestic in the UK, right through to Europe and across the globe as well. We're actually showing a 40% growth rate, even now, during this crisis situation. And that's because the solution, as you'll find out, the Kyriba platform was built on a SaaS platform, which means in times of a crisis, depending upon what country's been affected, then we can switch support literally around the globe. So we've seen massive growth, and of course with people working from home, the platform is built to have sign-off and workflow, etc. built into the platform. We have over 2,000 clients, individual clients, and as I mentioned before, they're all on one platform. So we've got multi-tenants on one platform, so we can easily provide updates and upgrades, and there's only one platform to support. So again, for those of you who are not too familiar with Kyriba, let me explain. Many of you will know us for the treasury management module. However, obviously today we're talking about payments, but we have other modules. And by combining those modules of working capital and risk management, combined with the integration we have with APIs, etc., we believe we are more integrated with any other financial technology provider out there than anybody else. And that means we can offer the ability to protect cash, grow cash, move cash, etc. So it's a very, very powerful platform that we have. Today we're going to talk about what's going on in the payment landscape. And believe me, I'm sure you all realize this, unfortunately only too well, there's a lot happening. You know, not only have we got ERP migration to cloud, but also we've got business continuity processes. So for example, in times of a crisis, even more so now is what's that business continuity look like? You know, it may have been designed, your backup, your DR to last a few days, maybe a week at the most. Now we've got the situation where you have to work from home or business continuity plans kick in and they could be there for several months. Who's to say that this might not come back again, a crisis later this year or another crisis of a different sort next year? So business continuity really is important and has got the focus of many organizations and IT departments. Now, while all that is going on, you know, you still have the unknown future landscape. You've got how do you future-proof your systems? You've got the strain on IT. You've got things like ISO coming through, compliance, regulatory, and new payment methods such as request to pay. So all this is going on top of the normal activity as a business that you're going through, combined with the current crisis as well. One of the things we find is that people use, and I call this the spaghetti payment, or payment spaghetti, however you look at it, is that we often come across organizations, they might just be in the UK, they could be across into Europe or global, or they may be organizations that have acquired entities as they've gone along. What we find is many corporates and businesses have multiple systems. It could be different ERPs, it could be treasury, it could be host systems. And across the globe, they're trying to link to different banks. They're trying to maintain the same sign-off process for approval behind different files, etc. And it's all quite messy, and it's very hard to maintain and police the current processes across these different systems. So what that means is it does actually cause points of vulnerability. I'm just going to walk through a few examples of what I mean by that. So for example, connectivity. Can that be compromised because you've got multiple systems across different countries with different sign-off processes behind that? How do you get visibility into every payment across the globe? What are the controls? Are they consistent for every bank, every country, every person? Are the controls to prevent unauthorized changes to supplier payment info? Do you have a watch list? How do you have a control center to view all transactions and updates and modifications? What about layers of protection after you enter your password? What about if you're doing FX trading? How many account signers? Who can change them? Does your bank or banks have that same list? So there's many, many complexities which are really difficult to try and control and use a consistent method. So on the subject of ERPs, you may have seen this article that came out only last week. So SAP users have been asked to apply a new patch to avoid security breaches. And what that means, if you look at this in more detail, is that even though SAP is a very powerful, complex, rich solution, but it's not a true payment hub. And what the downfall is with using the SAP system is it's not going through an independent payment hub that you can validate, get visibility, and see exactly what's going on in a separate entity controlling all your payments and releases. So what this report said is that actually it's going to let cyber attackers create new users who can have administration rights and rules that can bypass the current access controls of duties and payments. So 40,000 SAP users are going to be affected. Now, if the cyber attackers weren't aware what was going on, they sure will be after this article was published. So it's a real risk that goes on in the payment sector. I'm now going to move into how you can simplify and standardize and make all this consistent in terms of payment releases. By introducing a payment hub, you get very simplified, you remove all the spaghetti out of the process. And why is that important? Let's be honest and let's face it, ERP providers can't and don't offer independent payment hubs. That's not their role. They're an ERP system. They don't have independent payment hubs. Also, what's really important is ERP players, Microsoft, it could be Oracle or SAP, etc. They don't want to integrate against and across their own instances. So that's really important to note that. You're not going to get Oracle and SAP joining forces together. They just don't work that way. So whilst fraud prevention is almost the driving reason, almost always behind the payment hub, there are other benefits. For example, standardization of payment approval. This means you've got a standard set of rules and workflow and approval across the globe, across different countries, across different payment and ERP and host systems. It's all standardized. You do real-time payment screening. You've got true global visibility of exactly where your company is and all the separate entities, which can help you reduce your working capital needs and improve liquidity. And finally, of course, you've got the cost to maintain and develop bank payments. What do I mean by that? Typically, businesses will employ IT staff whose sole purpose is almost to look after bank connectivity and maintain and develop bank formats. By using a payment hub, I mentioned earlier that, for example, Kariba, we have a team of people whose daytime job is to literally maintain, develop, and keep these bank formats and connectivities up to date. So the final thing to remember is if you are looking at an ERP cloud migration, then using a payment hub can actually reduce the cost and time and also accelerate the upgrade. Time to market and cost reduction can sometimes, if not most likely, pay for the actual payment hub with a quick return on your investment. I mentioned about the crisis, I'm not going to go on about that because we're all coming out of it now. But who's to say if it may come back? Who's to say what the crisis may be, a different type next year? Who knows? But what I can say is it's pretty sure that people will continue more so working from home than they were used to. So what does that mean, especially for a finance department and a business organization making payments? When you were based in the office, you typically had and adopted a process where you knew exactly what the process was for sign off and release and approval of payments. That tightly coupled process has now become decoupled because overnight you were sent home to work from home. That means a highly integrated business process for releasing payments has become disintegrated. And I'm afraid that this integration yields cracks in the process and workflows. There's no longer what I call a wet signature. You can't run next door to your colleagues and back up documents against each other and get signatures, etc. That is not possible at the moment. And fraudsters are very well aware, as we've seen with massive growth in fraudulent activity, that these gaps are there because people aren't doing, and corporates and businesses, the process they're used to because they've all been sent to work from home and the processes aren't as watertight as they used to be before. Let me give you some examples of that, and then we can look at the difference between work rule-based fraud prevention and machine learning. So what do I mean by examples working from home? So, I get these every day. I get a text message from a fraudulent criminal about if I owe money, I've got to pay it to this sort code and that account number instead. Or you may get emails coming in on your personal level as well saying you owe this much money. But on a business level, you often get what we call bad actors who try to represent an organization. Maybe they miss the end off ABC Corporation, it becomes ABC Corporations. So they try to pretend to be an organization that you deal with, and they say, look, we've changed our sort code or account number. We've changed bank. Can you please pay these funds direct to our supplier? We don't want you to pay them to us because of the crisis situation. So those scams are happening quite actively. And then, it doesn't matter how many times people are told when they're working from home not to use personal devices. It's a bad habit, but people always slip into using their own computers because the screen's bigger or they're more used to it or it's got a better keyboard. Or you might find, you're told time and time again, you must use VPN, you mustn't just use personal networks. Well, I regret to say many people, even though they think they can get away with it, will try and use their personal networks. And that causes vulnerability. And finally, of course, the crisis situation meant a lot of people were forced to work from home very quickly. And that meant there was a lack of training and awareness because it just didn't have the time to put processes in place. This is a recent research from the AFP. And what it indicates is how could you make your global payments more secure from a survey that they did. What's really interesting to me though is the results. If we look at who has implemented dual control, which has to be a minimum of payment release and approval, an astonishing only 70% are using dual control. So 30% of people still don't use dual control. Multi-factor authentication, which is a must. This is where you use another soft or hard token device to log on. You might be familiar with doing this when you log on to your personal bank account or business account. And this is where it's actually challenging you for another authentication. Less than 50% of businesses use multi-factor authentication. 9% only use real-time screening. And this is quite shocking when this technology is available. Only 3% of businesses actually currently make use of AI, machine learning. So what does that mean? Let me just go through best practice for you to take away. If nothing else from today, if you could try and learn from the best practice and take these back into your business, back into your co-workers who are at home, etc., and try and build on your security and your infrastructure for release and consistency of payments. Embrace SaaS because your IT department already does. It's no good just using user ID and password. You must, of course, have a strong password policy, but you really should be using multi-factor authentication and, of course, encryption. Standardize and have consistent controls. So what I mean by that is if you have a payment to be made, you should look and see all the backup documentation behind that payment, the purchase order, the goods were delivered, who signed off the order, who signed off the payment. So all that documentation should be there. It's extremely hard when you're working from home without a payment hub to do that. You should have dual plus controls to release payments. You should have a payment central view so you can see exactly what's going on, built-in consistency from a workflow and approval point of view, automated confirmations, and build-in payment rule limits, which I'll explain in a moment. All data should be encrypted, as I've explained, until released, and you should also have real-time visibility and tracking of what payments have been released, when and where they are. The other thing I would like to point out is a lot of organizations, as I've mentioned, were forced to work from home very quickly. And that meant that, unfortunately, there were gaps in terms of educating the staff. So my recommendation to you is to nominate one person across your business as a crisis manager, a primary or point of contact that can sit there and look at how the business worked before and how it's now working from home, or some of the staff still working from home, and what gaps are there, what can be improved, document that, train people, and have good communication. No one was sent home with a document that told them how to work from home. So it was all very rushed, and ideally you need everything documented as to the process, or build these details in to a payment hub, including rule-based and machine learning workflow. Let me give you an example, the difference between real-time rule-based and also machine learning. So when you make a payment to a new or a newly updated bank account, it's really important that's flagged up. So is it fraudulent activity, or is it okay? You know, that supplier has changed their bank account. If it's the first time you're making a payment, then you want to double check the payment details. If you get a file imported in from an ERP system into a payment hub and changes are made, then you want that flagged up. It may be okay, but you want to have an alarm or a silent alarm that allows someone to go and investigate why that file or that payment was changed. International payments to a country where there is no known supplier. This happens quite a lot. But you know, if you've got hundreds or thousands of suppliers, it's extremely difficult to control and police. And this is where, you know, a work rule-based system could help you. So for example, you could be saying, before the crisis began in January, you were paying a supplier 4 times a month. That's fine. You set the workflow at 4 times a month. Then what happened? The crisis impacted and you ended up paying that supplier 2 times a month in April, May, June and July. You get to August, things are picking up again now, which obviously we hope they are, and they do intend to look that way. And what happens now is we're actually going back up to making 4 payments a month. So it's still within your work rule-based rule of no more than 4 times a month, otherwise flag a warning. But the machine learning has spotted, a bit like a human in a way, that the activity, although it dropped to 2, is now going up and it's getting back up to the level of 4. So what machine learning will do, it will flag a warning to you to say, this is under your work rule-based flow, but it is increasing, and I just wanted to make you aware of this, that it's going against the common pattern that we're used to for the last few months. Now, it could all be legit, it could all be great, but at least it's telling you and giving you a warning. The other way of doing and using machine learning is if you do have a threshold for payments going out or to individual suppliers. You know, it has been known for people to split a payment of capped £250,000. They might send it through as £200,000 and another £200,000 to a fictitious bank account. Well, this way, by using split payments and machine learning, it will work out that you've still gone over the threshold. And finally, in machine learning can actually work out that if you were used to making a payment to a supplier or a provider at the end of every month, and then suddenly you're paying someone halfway through the month, it won't stop the payment, it will flag a warning up before you release it and say the payment pattern has changed. So these are all really useful things that you should build in or have as part of your payment hub. I'd like to finish with the last slide, which is to give you some key takeaways. And these key takeaways are enhanced business continuity processing. You know, we haven't seen the last maybe of this crisis or the next crisis, and it's really important that you have a true business continuity process in place. One that won't work for just a few days or a week. And I have mentioned the Kyriba platform is designed to work literally around the globe depending upon where a crisis hits, and that will give you full continuity and business planning. It's all built in, which is why we're showing such a massive growth, because organizations are actually turning to us more than before the crisis began for our help, because they realize we can help provide the workflow and approval, reduce cost, and help fraudulent activity be prevented. I've mentioned how we can reduce cost, and that's quite simply by the fact that we have a team of people whose job is to maintain bank connectivity and bank formats. So you don't have to deploy your IT staff in the mundane task of keeping updating and updated with bank connectivity and file formats. I've explained how building into a payment hub, you can improve the control and workflows, and the fraudulent activity can be reduced. You can have approvals, you can have business rule-based and machine learning. Actually, rule-based and machine learning is the best way to go. I've mentioned real-time fraud detection, so real-time screening. By using a payment hub, as I've mentioned already, by using our system, and our team of people means you can become bank independent, reducing the number of connectivity you have and gateways to different banks, because it's all controlled through the Kyriba Payment Hub. And the very important thing I want to discuss, because you hear this all the while, you hear me saying today, get approvals, it must be at least dual approval. Then the next minute, someone's saying, oh yeah, always do straight through processing. So who's right? Well, the way I say it and the way I see it is you must have dual approval and straight through processing. You must have both those. So yes, of course, you've got to have dual approval and all the other security features I've mentioned, but as much as possible outside of those workflows and that sign off, you must have straight through processing. So try and avoid manual processes, manual file transfers. Everything else must be straight through by building on and incorporating the functionality of a payment hub. So above all, avoid compromise in the payment process. I'd like to say a big thank you for you listening to me talking about the actual payment hub, how it can help prevent fraudulent activity, and I hope that's been of use to you. I'm just going to finish before I hand over to Austin by explaining that if you wanted to, we have a free payments health check. If you complete this, it should come back, we can come back to you and we can analyse at no cost. We can give you a report as to any gaps or potential fraudulent gaps you may have in your payment systems. So we're quite willing to do that for you if you complete the actual online survey form. With that, I'm now going to hand over to Austin. I hope he's there.
Hi there, yes. Thank you very much for that, Paul. Really useful overview of what's happening in terms of the current crisis. Well, I was introduced at the beginning, so I won't redo that, but just to explain UK Finance's role, for those of you who aren't aware of us, we were formed about 3 years ago from the merging of 6 trade associations, including the BBA and a trade association I used to work for, Payments UK. So we're a trade association with over 250 members across the financial services, from sort of the major players through to small fintech firms. And in the sort of area I work in, we work closely with colleagues from Payment UK and other sort of infrastructure providers to make sure that the industry moves forward and is able to deliver good products and services to those that use them. So just to give a quick outline of what I'm going to talk about today, the slides I'm going to talk through just outline briefly in the first instance some of the research from our payments markets report, we'll talk briefly through some of the conclusions that can be brought out from that. We'll take a look at the scale of the regulatory and industry change which is happening at the moment, which I'm sure you will see is quite all-encompassing. And then finally turn to look at some of the actual implications for the market themselves, looking at some of the good work that colleagues from Payment UK are doing, as well as other providers in the market. So I hope you can all see the slides up on your screen, but just to draw your attention to this chart, which shows the volume of payments via various methods. Again, this is part of our payments markets report. For those of you who aren't aware, and usually we provide some projections on these, but due to the COVID crisis, which sort of threw all our models up in the air, should we say. But I'll leave you to project further beyond 2019. But the key points here to bring out, that dark blue line there, sort of the cash volumes steadily declining in contrast to the increase in both debit and credit cards. I'd also draw your attention to the light blue line down at the bottom there, which just shows the increase of faster payments and other remote banking solutions. So, I mean, what does this show? This shows that I think that consumers are increasingly moving on to electronic forms of payment in terms of an acceptance. And if we jump onto the next slide, which just shows some of the distinction in a volume sense from consumer payments through to business payments. Again, we just see the payments markets tend to be quite driven by that consumer payment. And particularly those spontaneous payments, so payments made to businesses for your shopping or for a new TV or such. So payments that are hard to predict, and that's quite different to the business payments that we're really talking about here. But moving on then, so those were just some insights from our report, but this is sort of more of the policy work that we do in general, and I'll just talk through what is quite a complicated slide and just try and pull out some of the key things that are happening in the market. Up at the top there, we have open banking, open finance. For those of you who haven't been keeping track of the innovation within payments over the last few years, open banking is a principle, and it's supporting regulation really there, a few rows down of PSD2. These sort of initiatives supply the facility to the market for new players, third-party providers, including payment initiation service providers and account information service providers, to develop solutions which sit atop the conventional banking account framework and provide services to consumers and businesses. So via payment initiation, so making payments via different interfaces, still relying on the same rails that are provided by financial institutions underneath, so BACS payments, faster payments, etc. And then also account information services. So services provided by companies which will pull out direct feeds from your bank account and enable you to integrate that directly into your accounting platforms or other things. So those are kind of, from the European and a policy perspective, some really interesting developments. We're really just starting to see the beginnings of what the open banking ecosystem can do at this time. And so then just moving past that, the sort of more policy-based stuff, and of course we'll skip over Brexit, which looms ominously on the horizon despite COVID delays. We drop into some of the technical infrastructure change that is happening in the industry. So again, as I've pointed out, that new payments architecture is something that is currently being developed and eventually will be delivered by colleagues on Pay.UK on the call here. So there are some interesting overlay services. The general architecture design of this is for a small and central clearing and settlement system, with overlay services increasingly deployed around it. And I'm very pleased that Simon Brooks is here and colleagues as well to talk about the implementation of Request to Pay, which is a very exciting development. That is actually the second overlay service to have been deployed by Pay.UK, the first, of course, being confirmation of pay. And it was very, very good, I think, Paul, to just hear you talking about some of those concerns with making payments to new businesses. For those of you who aren't aware, confirmation of pay is an additional tool provided by, beginning to be provided by banks at this stage, to make sure that payments to new payees are checked. So it's a tool to facilitate name checking of an account, so that when you're making that first payment, you can be additionally secure that you're making the payment to the correct person. Now, alongside that sort of wide development already within the retail payment space, we also have the Bank of England's real-time gross settlement system, which is being developed at the same time, and we'll come along a little bit to talk about some of the synergies between the RTGS and Pay.UK's new payments architecture. And then from a European perspective, again, we have SEPA Instant, which is being sort of rolled out increasingly, and adherence requirements will apply later on in this year. And finally, and certainly by no means least, just a quick word on cash. So, I mean, as you saw from the earlier slide, cash volumes have been declining for some time, but nonetheless, it remains an important payment instrument for those who wish to use it. And so there is activity ongoing at this time to make sure that those who want to use it are able to use it. And just to sort of come along then to this slide, again, I've just hinted at in the past the scale of change, the scope of change that's happening within the payments industry at the moment. And actually a lot of it is focused on ISO 20022. For those of you unaware, ISO 20022 is essentially a standard used for messaging between financial institutions in order to make payments. And the big change really from this standard to previous standards is that the data bandwidth is far greater. The number of fields contained, the flexibility of those fields and the implementation of those fields is a lot easier, and it enables a greater bandwidth of transmission of information along with a payment. As you can see here, I've already sort of noted Payment UK's development of the MPA. That's moving to the ISO 20022 standard. CHAPS, the Bank of England's RTGS platform, that's also moving to the ISO 20022 standard. We have then T2 and Euro 1 moving to this same standard. Now, what does that actually mean in terms of a practical benefit? Well, we'll come on to some of the sort of more corporate implications of that in a moment, but fundamentally this is about interoperability and making sure that people like Kariba don't have to go through the thousands upon thousands of banking formats to make sure that their products work, but actually we start to speak the same language, to use the same technical messages and make things a little bit easier. And that has implications for, well, particularly in this case, as we're seeing this global move to this standard, interoperability and payments across international borders. So expect to see some changes in those areas. I won't dwell too much on this slide. My colleagues at Payment UK will no doubt be able to answer your questions in more detail. But fundamentally, just to note the renewal of the new payments architecture, which will look to provide a better functioning service to consumers, primarily through that deployment of ISO 20022, and that will be deployed alongside and sort of the existing faster payments and BACS platforms. Just to note as well that sort of resiliency piece. So with the RTGS platform and the MPA platform both moving onto this standard, there's talks at the moment, and Payment UK are already engaging with the Bank of England to ensure that those messaging standards are the same across those two architectures, meaning that it'll be easier to fall back onto previous payments to alternate payment channels as necessary. So I've teased a few times now, well, what does ISO 20022 do to help? What does the development of the MPA and the RTGS actually fix? Well, I think one of the things that just came out quite strongly in Paul's original conversation there was, how does this actually impact the fraud environment? And I think that's really important, following on from those conversations about straight-through processing, AI, and etc. With increased data in the payments landscape, the opportunities to enable more granular fraud and financial crime prevention mechanisms is increased. So I'd expect to see, with ISO 20022 being deployed, with greater bandwidth being used for the payments messages themselves, more and more opportunities being created to prevent these types of fraud. I've mentioned already the operational resiliency piece and the international harmonization, but just to pull down again, to just reiterate that point 7 at the bottom of this slide, which we've stolen, I confess, from the Bank of England, that richer data piece. With more data in the payment message, it is easier and easier to track payments, to make sure that you can reconcile them into your system, and it's more easy for firms and providers to make solutions that actually ensure that these payments, these reconciliations as well, are more easily taken account of from a business perspective. Jumping on now, and again, I won't spend too much on this slide, as I know other speakers will be coming on to talk about this. But really excited actually to see Request to Pay as this sort of second overlay service for Payment UK being launched. And not too long ago, I was stuck in the bowels of 2 Thomas More Square with the rest of the Payment UK lot, involved in some of the technical developments of this work. So it is fantastic to see this great innovation coming out and being launched in the market. And finally then, just to make a quick note, I've already spoken briefly about the open banking and the innovation and the opportunities presented there. Yeah, I mean, I think 2 things here. The payment side of things is very important. So with more providers on the market, more opportunities for people to come in and to sort of provide that user interface and make that sort of payment journey a seamless environment, we'd expect to see a lot more development in there. Both on the consumer side, so consumers making payments via alternative means, and also on the corporate side, providing a sort of a single access point into multiple banking platforms and multiple payment providers. as it says here, I mean, the payments market is nascent, but it is growing. Additional functionality is continuing being developed from a sort of industry perspective. So we'll expect to see that kind of coming into its own over the next few years. And then finally, just on that account data and the account aggregation piece, I think that's something which is already being enabled by firms. The sort of the use case that I spoke about briefly, about those account information service providers pulling feeds directly from bank accounts, putting it into accounting software, and enabling just a very joined up view of accounts. So that's really all that I have to say at this juncture. Just trying to pull up the last slide here now. Just in terms of final conclusions, as has been sort of apparent, a lot of changes happening in the industry at the moment, and there are significant developments that will change both how consumers pay and how businesses are able to take advantage of the new services being offered in the market. So that's the final slides from me here.
Okay, thank you very much for that. Thank you. We're going to hand over to Bob, who, as I mentioned, is from one of the select few request to providers coming to market. We are running behind slightly on time. We were hoping to start the questions and answers at 1:45. So there's only 3 or 4 slides from Bob, and so we're running about 5–10 minutes behind. So my apologies, but over to you then, Bob.
Thanks very much, Paul, and thank you very much for your time today. You've already been introduced to who I am, but a quick introduction, a bit more than what Austin covered on the request to pay. The service was launched by Pay.uk at the end of May, and it is a complement, not a competitor, to the existing direct debit. Request to pay exists within a secure messaging framework. Think of it a bit more like a sort of email on steroids. The framework facilitates a chat-type messaging, similar to what we've all come across with the likes of WhatsApp, as well as the ability to carry structured data for transactions such as a request to pay. And my former colleague Simon will talk a bit later about the account notification. Ian. A pay would be able to view a transaction, a request to pay transaction in an app, and then settle a request either using their own banking app or an open banking type payment, something along the lines of what Austin covered when he talked about open banking and PSD2. Obviously, there's a lot more around request to pay beyond this brief introduction, and we'd certainly be happy to have a discussion offline if people want to discuss more about request to pay afterwards. So, having set the scene around request to pay, how does it benefit the corporate customer? Why do you want to get involved? What are the improvements that this will bring and will gain to your organisation? It exists within a framework to facilitate intelligent dialogue with your customer. It can improve your cash flow and your cash flow forecasting. Aid reconciliation can therefore improve your brand image and as a consequence provide the capacity for greater stickiness and loyalty from your customers. So who are we? Request to Pay Limited is an approved Pay.uk solution provider, and we've partnered with MasterCard to provide and deliver request to pay solutions. We are, in modern day terms, a fintech, and we've been involved with this request to pay from the earliest days of the concept and now into assisting in the deployment. We offer a turnkey, cost-effective, scalable and cloud-based platform solution to meet the request to pay needs for our clients. So what are the challenges that corporates face when collecting funds from payees? Frequently, there's no insight into the customer's intent or behaviour at the invoice or the payment request issue date. You don't get a chance to maybe have a conversation with your client or the payer over the receipt of those funds. Sometimes reconciliation is both difficult and laborious. Yeah, how many times you get a problem at times where basically both the payer and the receiver of the funds both want to have their own referencing. Maybe from the payer's point of view, it's I want a purchase order. From the receiver, it's a sales order. How do you reconcile those two parts? Request to pay can bring value to those. Cash flow forecasting. You don't know at times when that cash is to be expected, and it becomes a finger in the air because it's based on assumptions. And therefore, this leads to a fragmented receivables process. So our solution of request to pay provides the messaging tools to be able to talk to your customers, your payers, provides some prompts and a full audit trail, which therefore means you can analyze and determine your customer behavioral analysis. It therefore gives you better insight into where your cash flow will be going. And basically, because you've got the real-time messaging, you can therefore manage the funding options for your platform. The benefits provide you with a competitive edge. You know more about your customers. You know more about what's happening. You get improved cash forecasting, and it optimizes the discussion that you can have between buyer and seller over payment terms. It improves both your respective liquidities, and because you can both use the methodology of the referencing, it improves your own data accuracy. It automates manual processes, therefore giving you lower cost implications. And it creates multiple and incremental revenue and funding opportunities. So where are the issues for the payer and the biller? For the payer, the concerns that come across, and certainly when we look at it in these times of going through the COVID and the furlough and the redundancies that have taken place, we've moved very much into what may be called a detriments market. And so therefore people want more control over their finances. They want better control over when they make payments. Sometimes the inflexibility of the direct debits just don't work in some of these situations, whether it be from receipt of benefit, receipt of redundancy, etc. People find it hard to manage their finances in such situations with so many pressures. But people want to be able to communicate efficiently and easily with the people they're paying. They want it to be treated fairly and reasonably. And sometimes it's just complicated to pay and communicate at the same time. But also from the biller's point of view, how do I communicate with my customers when I've got only the direct debit option as really? The invoice to supply chain is too fragmented. The dialogue with my customer is not always linked and it's not always recorded. That desire to have a better way to manage payments, track and link that dialogue, optimize your working capital, strengthen those supplier and buyer relationships, and effectively streamline the cash conversion cycle. So what sectors are going to be the game changers for request to pay? The obvious ones are the utility providers, the telecoms companies, water, gas, electric, TV. Beyond that, the banks, obviously, because they've got the retail customers. Charities, I find, is a fascinating one because you can link in things like the reclamation of gift aid from HMRC and a very sort of keenness on their part to be able to refund gift aid in a simple and verified manner. Finance and debt management. Again, as we move through these detriment times, so that ability to have dialogue in the debt management field with your customers. Corporates, the whole B2B scenario, and there are some very interesting potential use cases down the road as we can see, request to pay evolve, housing associations. These are the areas as a start point that we see as being the game changers. How does it all fit together? We've got the supplier on the left, all of their issues. You bring through the request to pay in real time. We've got Simon speaking in a few minutes about Ian, and then you've got the buyer, the reconciliation. At the bottom, then you've got the various payment methods that can be used to actually settle the invoices or the payment. Ladies and gentlemen, I thank you for your time. There's our contact details. We would love to talk to you about how request to pay could become that game changer and the next generation of payment processing for the UK. Paul, back to you. Thank you.
Okay, thank you very much for your time. I'm now going to hand over, I'm now going to hand over to Simon, who, if I just give me a moment, is going to continue by explaining a little bit about the situation with Ian. And I apologise for the slight loss of the slides here, so bear with me one moment. Right. And again, sorry about the running a little bit late, but it's been invaluable. I hope everyone will agree to learn these things today. So I'm now going to hand over to Simon, who is going to talk a little bit about Pay.UK, request to pay, Ian and the impact to direct debits, and how request to pay differs from the EBA version, if I can call it a version. So over to you then, Simon.
Thank you, Paul. I'm aware of the time that we're at, and so I'll try and keep this brief. I'm Simon Brooks. I work for Pay.UK. I have worked for them for 5 years. Before that, I worked for HSBC for 32 years. Many of you I will have spoken to about request to pay. Basically, request to pay is my baby. I guess with a small team at Pay.UK, I'm responsible for launching it on the 29th of May. And if Paul could just move me to the next slide, I just want to give you a quick insight into the structure of request to pay. You've heard from some of my colleagues on this call who've talked about the request to pay service and their elements that they're utilising, or the bits that they're partaking in. But I thought it would be really useful, before I talk about Ian, to give you an overview of the actual request to pay service. As I say, we launched the framework on the 29th of May. What does that mean? We don't run the central infrastructure in the same way that a payment proposition does. You know, I also work in the service lines on the faster payments. So it's unlike faster payments, it's unlike BACS. There's no real central infrastructure. The actual proposition is run by the users of the service themselves. So we have 3 layers to the request to pay proposition. There's the top layer, which is about the application layer. So this is where requests are sent and received. That can be on a personal basis, or it could be from the government all the way down to a sole trader. Effectively, we have the capability for files of payments up to 250,000, 500,000 to be populated into the system, down to an individual sending one request to a window cleaner, for example, or vice versa, the window cleaner sending it to me personally because they've paid they've cleaned the windows and I'm paying for that process. As Bob rightly said, it is akin to the email. The middle layer, which is the repository layer, is effectively where the emails, where the request to pay messages are stored and actually transferred from one repository to another repository, so that the biller can send it and then the payer can receive it. Effectively, request to pay is the equivalent of the paper bill, but it's an electronic version. So the process is effectively you can send it from the top layer using your mobile banking app, or using a mobile app that will be produced by a number of organisations who are looking to operate in this space. It could be done from your desktop. It could also be done via a bureau, for example. A bureau could submit into the central infrastructure and allow both, utilise the fact that there will be BACS, but also move into the request to pay field as well. using the opportunity to cover both areas. So there are lots of ways to engage with request to pay. As I say, you can either operate in the top layer, you can operate in the middle layer, or you can operate in both. So we, as I say, launched the service on the 29th of May. The bottom layer, the bit that says framework, is basically the bit that pay.uk looks after. And this is where we make sure any organisation that joins is actually going to be safe and secure, and ensure that the messages that are sent across the service are also safe and secure. So there are a number of factors that we've got in place that will help us to ensure that the proposition is safe and secure for users. I can't say that it's 100% because you can never say that, but we've tried to make it as safe and secure as we possibly can. So that's a sort of whistle-stop tour around request to pay. And it's important to say that this isn't a payment service, it's actually a messaging service. And from that perspective, it's agnostic as to the payment. So a payment can be made either via faster payments or cards, debit and credit. It can be cash, it could be chaps, it could be backs, it could be by pigeon if pigeon ever exists. But it's agnostic to those payments. And in addition to that, it also has the capability to carry information from an international perspective. So it can also operate with BIC and IBANs. And finally, it's future-proofed. It's also able to be delivered in ISO 20022 whenever that comes along. Paul, if you could move me to the next slide. Thank you. So the main reason for me being here is to talk to you about Ian, which is the Interactive Advanced Notification. We're currently working on this, so it doesn't exist at the moment. But the great thing about Request to Pay is we've created a messaging service, and that, like any other messaging service, we can then adapt this messaging with the information, so the fields and the formats, to allow us to operate in different spaces. So some of the other things that we're looking at that you might be interested in would be actually splitting the bills. So we're talking to government entities in respect of being able to deliver a payment for some goods, and whereby the payment for the goods goes to the merchant, but the bit that's related to the VAT goes to the government. So those are sort of things that we're working on. Other things include invoice finance. We're looking at something in that space, and also I'm interested in looking at something from a documentary credit perspective. But that aside, you'll be interested in what we're doing in this in Ian's space. So Ian is something that we've been working on with the BACS team. It's now useful because we sit right next to one another in pay.uk, and we start thinking and talking about the ways we can utilize different services to help each other out. Now, I am aware, and I'm sure a lot of you on this call are aware, that a number of DD rejects occur at the initial setup of a DD. So the first direct debit that is taken, we've got some statistics that suggest that a big majority, there's quite a big percentage of those direct debits, the first ones that don't actually fly, they're either cancelled or stopped in some way, shape or form, because the payer doesn't actually recognise the payment that they're going to make. One, because they're not sure, that they don't recognise the amount, or two, they don't recognise the biller. A good example of this, you buy a sofa from Sofa Village, you sign the direct debit, and a month or so later, when the payment's due to be made, you get a text that says we're going to debit your account, and it comes from Hitachi Finance, for example, and it says we're going to debit your account and it's for this amount. And you look at it and you go, I don't know anything about Hitachi Finance. So you phone up your bank and they say the same thing, and you cancel the direct debit. So what we're looking at with Ian is to be able to use the request to pay rails to enable a remitter of a DD to send a secure message to the payer of the DD, advising that the direct debit will be taken on a specific date from a specific account, and it's being taken by X company. we can actually deliver far more information than either a text or an email because we are a secure service. So as we said, we can carry a lot more information. Unlike the text or the email, within the Ian proposition, the receiver of that, i.e. the payer, will be able to respond. If they're quite happy for that direct debit to flow, they don't need to do anything. But if, for example, they're not happy with the date that the direct debit is being taken, they can respond back to the biller and say, please, could you change the date? Obviously, the biller has the right not to do so, but it might be in his interest to do so because it's more likely that the payer will allow the direct debit to fly on the date that is preferable to them. In addition, so using my Hitachi Finance example, the receiver of the Ian could respond back to the biller and say, I'm sorry, I don't know who you are. Could you provide me with more information? We aren't going any further than that at the moment. What we don't want to do is muddy the water between what direct debits are and what request to pay has been designed to, the detriments it's been designed to resolve. And therefore, by going any further at this moment in time, that water, I think, would be muddied, and people might start to ask, well, why do I need a request to pay when this Ian type function can improve the direct debit proposition? There are a lot of reasons why that isn't true, and I don't propose to go into them now. But if anyone would like to discuss this with me or anything about request to pay, then please feel free to do so. My contact details are on the back of these slides. I'm sure that Paul and the team will supply those as well. So from that perspective, that's a quick whistle-stop tour about Ian. I think talking to a number of banks, as I have over the course of the last 12 months, Ian could be a game changer in the request to pay proposition. I know a number of banks are concerned in respect of direct debit rejections, and I think this could help. But I also know that from talking to the banks, the actual corporate sides of the banks are really interested in request to pay, but there's a little reticence in the retail side. I think Ian could make a massive difference because it will help retail customers and prevent a fair number of direct debits being cancelled or rejected. So I think it could be a game changer, and that's the sort of feeling I'm getting from banks and other organisations that I'm talking to. So without further ado, I'll hand back to Paul, and we can then commence with a Q&A, I believe.
Yes, thank you very much for that, Simon. And my apologies again that we're running behind time. It's pleasing to see so many people have stayed on the extra time, so we're obviously doing something right and of interest. We're now going to go straight to the Q&A session. So VJ, could you let me know what questions have come through so far, please?
Yeah, sure. So there are some questions that have come through. So just to reiterate, the Q&A box is on the bottom of your screen. Just simply press the button and type away. So the first question, in fact, it's probably links to Simon's previous comments. Given that banks are so key to request to pay, how many banks have actually taken it up? I guess that's yours, Simon.
Yeah, okay, happy to take that one. So at the moment, with the take up of request to pay since we launched the framework, we have 2 organisations that are almost through and approved and authorised to operate in the ecosystem, which I described earlier on. We've got another 2 that are working their way through that process, and then there are another 6 organisations that are showing interest. So that's 10 at the moment, and we're obviously talking to another 20 to 25 who are showing interest. And within that 20 to 25, there are a number of banks. And I know there are a number of banks on this call. So, you know, to them, I would say request to pay, I think, and I would say this, wouldn't I, but I think will be a game changer. I think, as I described, there are a lot more things that we can do with it. So, you know, I would recommend that banks get involved. To the question, how many are involved at the moment? The answer is there are none, being open and candid and honest. But that's not to say that we're not talking to a lot of banks at the moment. And it's fair to say that the majority of those are actually showing a real interest in getting involved with request to pay. And as I said, part of my presentation, the corporate side of the banks are really interested in request to pay. for their corporate customers for obvious reasons. It's a bit more on the retail side, you know, what is it in it from a personal customer perspective? And I think there are lots of things that are there that can benefit the corporate customer. There's the element of control, there's the element of flexibility, but there's also worth noting that from research that we've done, actually 45% of customers who have utility bills don't pay by direct debit. So 55 do by direct debit, but 45% don't. So allowing customers of banks to be able to deliver some of the benefits that direct debit customers get, I think would be a bonus and would probably add to the kudos that the banks would get from their customers. So a long answer to a short question, but I hope I've answered it, but please feel free to delve deeper if you want.
Thanks, Simon. Very comprehensive answer. So let's have a look here. There's a few more coming in. Okay, so this is probably one for Paul, I should imagine. So how can faster payments help with liquidity?
Okay, thanks, VJ. So we're seeing more and more businesses moving to faster payments, replacing other payment methods. And the reason is they keep the funds, especially the way the market is at the moment financially, they keep the funds in their bank account until they need to actually release them for an instant faster payment. So examples of this we're seeing as well are that you can sometimes order goods now and the supplier or the shop or whoever it is don't actually have those goods in, but the moment you've made payment to that outlet or that business, they then go and actually procure the goods for that customer or business. So they're not maintaining stock. You place the order, you pay by faster payments, and then the goods are ordered and shipped to you. So therefore they're reducing their stock and their money in buying goods up front before they sell them. But we're seeing massive growth as well because it links into request to pay. And that means you can say to someone, if you want, we've got the liquidity, we've got the cash, we're willing to pay that £250,000 invoice. If we do that today, because we can do by faster payments, we'd like a discount of 5% because we're paying ahead of the payment terms. So I hope that answers that one.
Yep. So let's have a look again. And the fact that there's a question that's probably similar to what Simon's just gone through, but Sam, if you want to pick this one up, can you give a timelines on request to pay and any dates for bank adoption?
Okay, so obviously, as I answered to the previous question, you're obviously delving a bit deeper and you want a bit more colour on the picture. So as I said, we are talking to banks and there are a number that are showing interest. And I am aware of some that will be developing the proposition. If I'm being perfectly open and candid with you, I don't expect any banks to be signed up to the proposition much before the end of this year, and more likely probably the beginning of next year. But I think more and more will come on during 2021. So that should give you a good picture. So towards the end of this year, but definitely into 2021 and through the first 6 months, I would say would be a good gauge to when they're going to start offering these services. Great.
And I'm just keeping my eye on the timing. I think we've probably got time for maybe 2 more questions. So let's look at what we've got here. So again, this might be one for you, Simon. As a direct debit provider, how can I utilize Ian as part of my proposition?
Okay, so if you remember the ecosystem that I described, as I said, so let's take a utility. A utility would have to partner with an organisation or actually create their own repository. If they did that, they could then submit a file of Ian's into the repository, and those then would fly to those individuals that have signed up to the service. You actually need, and the bit that I probably neglected to say within the presentation was, there's an address, there's a request to pay address, which looks very much like an email address, but rather than it's got hash, which denotes it one from the other. So to be able to send an Ian to a customer, the organisation, be it a bureau or be it the utility or a bank, would need to work with a repository provider or build their own. but then the customers would need to be able to have a this request to pay address for them to be able to send it to them. So working with BACS, our belief is that the DD proposition may change slightly. So when a consumer signs up to direct debit, they'll be asked if they want to receive the IAN, and if they do, then that process will take place, and they will join the service and get a request to pay address. That's a simplistic way of describing it. If you want more detail, I'm happy to take further questions, or we can do that offline. You can drop me a line or pick up the phone.
Thanks. Thanks. So let's look at the time. Let's do one final question. There's a few more. Well, let's run this last one. Probably one for Paul, actually. So what UK payment methods do Kriba support?
Okay, thank you, VJ. So as I indicated earlier in my slides, we provide domestic and international payments. So for example, in the UK, we support BACS, direct debits, direct credits, faster payments, etc. And then we support across into Europe with SEPA, and then of course ACH and into the global world as well, SWIFT, etc. So we support all payment capabilities across the globe, all localized depending upon where an organization is based. Okay.
Great. Okay. So I think, given the time, I think we will come to an end for today's webinar. So what's left for me to say is obviously thank our panelists, yourself, Paul, Bob, Austin, and Simon. Thank you for your time. I know you guys are busy. It's very much appreciated. And indeed, our listeners today, it's a busy time, so very much appreciated. And have a great day. Thank you.
Thank you all. Thank everybody. Bye-bye.